Hello, this is Datatraderpro with a nightly market wrap, Monday, January the 9th. All right, let's get right into it. So we had some continuing divergence. I noted in our last market wrap that we were seeing the signs of some unhealthy divergences, both in breadth indicators and also between the indices, the four major indices. Right now, Russell seems to be the weakest. It was the prior leader mentioned before. It made another low today, while the NQ100, the NASDAQ, techs just kept climbing. They feel toppy, but where exactly they're going to top? I mean, we're approaching earnings now from Q4 of last year. Actually, today I believe there was a few names that started with earnings. So yeah, we're into earnings season. NASDAQ generally likes to front run earnings and makes a new high, has for a number of quarters made new highs into earnings and then pulled back. So we'll see if that pattern continues. The divergences are not only between the major indices though, they're also in internals. So we had a neutral range day today with a very, very, very tight, this is a regular trading hour SPX range, so about 7 points. Or less regular trading hours. Very, very narrow range, unusually narrow. And yeah, so what this is, we've got a big divergence between the dollar-weighted buying pressure, which is our own proprietary chart. It's a measure of net money flows into key market moving stocks, which is our own index of market moving stocks, and our version of the McClellan, the intraday McClellan oscillator, which is a way of measuring basically a moving average on the NYSE advanced decline. Only this is not just NYSE, this is a broader based index. It covers both the NASDAQ combined and the NYSE. So it covers, a huge chunk of the market. So what we've got is a relatively small number of stocks are being pushed up. A much broader base of stocks are being distributed. So we've seen this action before. It's not the first time we've seen it. It generally happens in and around market tops. It's not tremendously healthy to see this. It doesn't mean that a top is that we topped today, or that SPX topped the other day when it made a new all-time high. We may see higher highs, but this is the kind of behavior that you get, and it's just helpful to note that you're getting into thin, rarefied air here. Breadth as a whole is thinning out. The number of names being bought is significantly reduced from the earlier parts of the rally, so the rally's tapering off. The few Momo names that tend to keep the market up at these times are being bought. So there are some large institutions that are trying to keep this market up, but it's on smaller and smaller numbers of stocks. Okay, so that's important. We'll go to breadth. We'll see NYSE advanced decline. Negative, not hugely so, but a little over -2 to 1. NASDAQ, this is NASDAQ combined, same thing, almost to 3 to 1. Russell got down to 6 to 1, so obviously it was the most bearish. It was down 0.75% today. The delineators, NASDAQ, a lot of volume going out of NASDAQ stocks. So I think the rally's being held up there. This shows that the rally's being held up there by just a few names. So not a broad-based rally at this point. It was earlier, but that's tapered off significantly. And we can see that on one of our intraday trading dashboards, particularly to the NQ100. We did, it rocketed, up another 30 points today, roughly, from pre-market levels, but we didn't have tremendously bullish breadth. The advanced decline never got over 2 to 1. The net volume was very slightly bullish to neutral, and NASDAQ volatility is increasing, which is a sign that maybe we're going to get a pullback. And actually right at the end of the day and into after hours, we did get a small pullback. So we'll see if that continues tomorrow. If so, that's been the leader in the last leg of this rally, and if NASDAQ can't lead us further, I think the whole thing's going to roll over for a slightly bigger correction. I'm not calling a pending imminent doom kind of top, but you know, markets can only go so far in a short time, and then they need to pull back. Whether it's something bigger or not, we'll need to see. The picture in volatility agrees, as we'll soon see. Okay, VXST buried down about as far as it goes in the 9s, in the mid 9s today. Although that's up slightly. It was a little worse on Friday when we had the rally in indexes. VIX in the 11s. So these are reversal area, and we're starting to see a reversal in that. I mentioned in the last excuse me, in the last wrap, to watch the volatility, because as this rises and gets into the green, that means some volatility is coming into the VIX. It's the precursor to a move in volatility. VIX has its own index, and it's the VVIX, and that's what this represents. Okay, still for VIX exchange traded products such as VXX, UVXY, XIV. Well, XIV is an inverse, but they are still suffering from quite a bit of contango between the front and near month futures, which still have a week and a half to go or so to expiry. So this is a headwind that's keeping VXX down, even though volatility is slowly on the rise. So it doesn't mean that VXX is going to take off anytime soon. You're going to have to see this number come up. You're going to have to see a real move in the front month future for VXX, etc., to get off the floor. All right, so let's go straight to block trades. Now we had this large 8 million print on SPY. We noted we popped above it. We've come back down roughly to this level, so 226.32. That occurred at 226.40. So we're right in the vicinity. We can't really seem to break out from here, but we're not dropping either. So you know, these ranges are not very easy to trade when you're in the middle. You know, we've got some sell prints here, 227.20. 22, I would say, close to the high of day, not the high of day, but close enough to it. We're below that, but we're still in the range here, and we're definitely above these last support prints, which are important. 225.23, and then these down here, 223.29. So watch those levels on the SPY. Very important levels to hold on a pullback. Okay, QQQ, very bullish still, above the last big prints, above 121.87. We're at 122.25. Not hugely above them, but we're definitely above them. So we'll use this level, 121.90. Yeah, 121.90, 121.91 level as support. If we manage to break through these, then 120.21 and 119.58 are your supports. Now IWM has been bearish. It's well off its highs, $4 or so off its high, thereabouts. But we did see some block trades close to the end of the day, right? So actually this is an after hours. Not huge, and we're definitely under these last line of sells at 135.78. If we pop up, that will be your first line of resistance, and then all the way back up to this high 137s, low 138s level. Okay. The Dow's an interesting story, because the Dow, this is DIA, the ETF, but the Dow cash index got so close to 20,000, and all the news shows, all the financial news shows have been talking about Dow 20K, Dow 20K, you know, for weeks now, and we got so close to it. I think within like 0.4 of a point of it, and then we couldn't make it. So whether there's going to be another effort to push it higher and break that. We definitely got over 5,000 on the NASDAQ 100. That was a key milestone. The Dow 20K is a key milestone. We may as well have hit it because we got so close, but they may want another try higher. But we're getting kind of long in the tooth here. That's the theme I want to convey here. Okay, volatility space for block trades, definitely looking like accumulation down at this 22 level, 21.76, 22.04. Sells up here. Starting some buys down here, but nothing huge yet. Decent size print, 300,000 at 661 on UVXY. Again, UVXY suffers from a leveraged form of roll decay from that contango we talked about earlier. So this can, even with SPX not moving, this can decline in value every single day. VXX as well, but this is a two-time leveraged version of VXX, and that basically it'll have twice the decay. All right, and maybe a sell print. We don't know yet. We'll see how price reacts, but basically only 100,000 on XIV, so it's not heavily institutionally traded. VXX gets much bigger prints in the volatility space. Okay, some interesting things in the energy space. We're waiting for a corresponding large print on the lows on XLE that we do see in USO. So we tweeted right at the end of the day, over 1 million shares, 1,035,000 shares, and then another 485,000. So over 1.5 million in prints on the low. Just those two prints. Some other guys thrown in there as well. We expect a bounce in oil. So usually when you see these, right at or near a low of day, especially into close, you'll generally see a bounce overnight and into the next beginning of the next session, at least. Maybe the start of something bigger. It's very hard to know, but basically in USO your level's 1131. So low was 1128 roughly. Yeah, so right near the lows, a couple of cents with from the lows, and we should pop back up. UNG deeply oversold on technicals. We tweeted when we saw these prints, prices still gone lower. I believe this is the beginning of some accumulation, and I believe that this is continued accumulation. I think we'll see a pop back up to the $9 level at least, but we'll have to see. Obviously the best way to read these prints is bearish below, bullish above. So even though these look like accumulations, it doesn't stop price from going down, and maybe somebody's buying more. Not a huge number here so far, 131,775, but we'll look for what kind of a relief rally we can get. Natural gas has sold off about 25% in the last week and a half, something like that. So tremendous move down in any commodity in that short of time. And I expect at least a dead cat bounce, and maybe something more, but we'll have to see how that pans out. Okay, the metal space. We've seen metals. Actually, this chart doesn't go back that far. It only goes back 2 weeks. But just a little bit before here, we tweeted there was a 2 million print, 2 million share block trade on SLV at the low, and there was about a 1.5 million on the low on GLD back here somewhere, and price has gone up. So we did note that these may be the start of some sells, and we'll see. And price really hasn't recaptured that, with any gusto. We came down, and we're probably got some buying here. We came up, and we've got some prints here, but price is going to need to get above this, 112.73 level, roughly there. 112.67 is where these prints are. 112.58. So all in the same area. Mid to high 112s on GLD. Above that level of all these, great, bullish, and it's probably going to 1200 or above on the gold futures, if they can maintain that. SLV, we saw a similar print. So we saw, what might be a sell or some profit taking on the highs, and then another print here. Whether that's supportive for another run higher, 1570, we'll see. Price is going to have to get above there, though. Same thing with GLD. Okay, where we are on the SPY volume profile. This is a volume profile chart of only the largest blocks. So any block trade 250,000 shares and above in the last 6 months makes it onto this chart. So we're right at support here. There's a bunch of support, as we saw, in this zone, in this 226 to 226.50 zone. There's support below here. We've got support in the 225s, and then really not a lot until we get down into the 220 to 218.50 area. There's a lot of support that starts to come in here. There's a bit of an air gap. I mean, we moved up so quickly through this area that we didn't get a lot of volume. So there may be some backfilling in this correction, and then we go higher again. I have no idea. All we can do is watch the block prints as they come out in real time and make a determination from there. But I think that's going to be it for tonight. I will show you what am I going to show you? I'm going to show you, so this is a chart of VXST. You can see that whenever it gets into the 9 area, I mean, going back quite a ways, VXST is a relatively new index. It only goes back a few years, but every time in its history when it gets into the 9s, we have a good pop in volatility. As you can see here, sometimes it takes a while, so you're bouncing, and then you get a pop. Volatility, what it means is that short-term implied volatility, VXST, is the 9-day rolling implied volatility index. It's basically the 9-day version of the VIX. The VIX is a 30-day implied volatility index. Okay, so whenever you get this deeply oversold, you're going to get a bounce at some point. People don't believe it at the time, and they think indexes can go up forever. But implied volatility, basically, people are so complacent they're not even worried about a down move, and too many people get on one side of the boat, and then that's when things roll over in markets. Okay, VIX as well, down into the 11s. You go back in history, anytime VIX is in the 10s or 11s, it's well below its long-term mean. Its long-term mean is up close to 20. I think because we've had low volatility period for a long time in this bull market, I think it's somewhere in the 18, 19 area. It used to be 20, but I think it's come down somewhat. So, but over a decade and a half or 2 decades or whatever it is, that's your mean is somewhere in there. And you see that when things get pressed down, and then we have a pop. Things get pressed down for a protracted period, we get a pop in volatility. It's good shorting opportunity in volatility, but you never know how high they're going to go, right? We've gotten into the 30s, we got into the 50s last year, so I expect to move back, at least into longer term historical mean area coming up reasonably soon, which means 18, 19, 20, that kind of region from here. So how we get there and how soon remains to be seen. Okay, all right, I think we've covered about enough for tonight. It's a quick wrap, and thanks for joining. We'll see you soon. Bye.